one day at a time.
It's that real this time around. Lock and load.
Get on your knees.
This is the point of no return. I can never go back. Life without parole, upstate, shackled and trapped. Living in the hole, looking at the world through a crack. That I'd rather shoot it out and get clapped. I've gone too far, there ain't no coming back for me. Auschwitz gas chamber full of Zyklon B.
Welcome to Orwellian Optics, the podcast that clarifies modern finance through a macro lens. Brought to you by Alio Capital. We're here to break down how macroeconomics, policy, and political power impact your personal finances and your family's future. Experts agree geopolitics is the biggest risk to your portfolio. We're on a mission to cut through the noise, challenge conventional wisdom of investing, and arm you with the insights you need to stay ahead of the game. Together, let's dissect these critical topics and reclaim control of your freedom and financial future. Welcome, ladies and gentlemen, to another episode of Orwellian Optics, a podcast by Alio Capital. We have a special guest here for you today, Lawrence Lepard, the author of The Big Print, What Happened to America and How Sound Money Will Fix It. Lawrence, thank you for being on the show.
Nice to be with you guys. Nice to meet you both.
Yeah, this is right up our alley. Basically, we focus on macro investing here, and our goal as a company is really to promote economic literacy. We feel like that's really the big problem underlying our current political divide. So, the book talks about a lot of economic issues, but can you kind of walk us through what led you and what was the catalyst for you to write this book?
Yeah, sure. So as you know, the book talks about sound money and the importance of sound money and how the country has drifted away from sound money. And it's a historical account of how we got to this position we're in now, where things are fairly broken on a lot of different metrics. But what drove me to write the book was last year at some point in time, watching some presidential conversation or debate conversations take place. And I thought to myself, everybody's looking at the wrong issues. Nobody's talking about the monetary system. Nobody's talking about the deficit. Nobody's really focused on inflation, which I think is the greatest risk and cause of pain to the average American. And it struck me that there was a need for somebody to write a book that explained these problems and why they exist and how to fix them in very easy to understand terms. I mean, there's some outstanding books out there on the topic. I mean, The Bitcoin Standard by Safe and, Broken Money by Lynn. But both of them are pretty scholarly. And I found when I give them to people, they don't always read them. And so I tried to, I borrowed a lot from their work, but I tried to dumb it down a little bit and explain how we got to where we are right now, such that we're suffering from this inflation and all the political dysfunction that goes with it, because I felt like there was a niche in the market for this book because nobody had really written this book. And so I thought, well, you're pretty well positioned to do it because you've been a sound money guy for 40 years and you understand gold and you understand Bitcoin. So, and you kind of have watched what's happened. I've been an investor since the early 80s. And I watched all the bailouts. I watched all the money printing. I watched all the things they've done. And so, it led to the book. And the title of the book is The Big Print. Now, I anticipate there's another one coming, but we've actually already had two big prints. We had one in 2020 when COVID took place and they grew the Fed balance sheet enormously and the money supply by 40%. And that led to all the inflation we've recently had. And then, of course, they had one before that back in 2008 when we had the GFC and they grew the balance sheet and took interest rates to zero. So this is just another big print. But the book kind of outlines why I believe it's inevitable.
Yeah, I think, you bring up a lot of great points. I want you to dive a bit deeper into Bitcoin. There's a lot of people don't understand Bitcoin. People question its volatility, its intrinsic value. How do you see it as a potential solution to the problems that you just outlined?
That's a great question. And so just so people who haven't read the book are familiar with it, the first half of the book, somewhat depressing. It's kind of like, here's how it's broken. Here's why it's broken. Here's how we got here. And the book is divided into part one is the problem and part two is the solution. And so I've had people say, gosh, I got depressed reading part one. I said, yeah, I know. Things are kind of broken. But part two is the solution, which is Bitcoin. I'm glad you asked. So Bitcoin really is a more perfect form of sound money than gold. Until Bitcoin was invented in 2008, gold was the soundest money available because it had the lowest stock to flow ratio and it had been accepted as money for 5,000 years. Now, that doesn't mean people were transacting in gold. Nobody was using gold coins or gold dust to pay for things. But if you wanted to preserve value, gold was your only choice. And Bitcoin really, in my opinion, is just digital gold. I call gold analog sound money and Bitcoin is digital sound money. We live in a digital world. And, the critical feature of gold is that the supply of it grows very, very slowly. I mean, the reason why we have inflation in general is because the government grows the money supply, full stop. When they printed all the COVID money, that's why all the prices went up. There's just more money chasing the same amount of stuff. And you can't do that with gold. It's geologically constrained. There's only so much of it in the Earth's crust. And every year we mine some, but the amount we mine is only 1.7% of all the amount that's out there. So there's quote unquote natural gold inflation of 1.7% a year, but that's pretty modest. Bitcoin comes along, and by creating a digital token that basically is immutable and can't be, changed, and is totally secure, they actually solved a problem that gold had not learned how to solve, which is to say they made the money supply fixed, algorithmically fixed at 21 million coins. And so with that as a backdrop, what it suggests is that those coins are going to increase in value for years and years and years to come because there's only a fixed supply of them. I mean, every other commodity in the world, if the price of the commodity goes up, the supply will go up because we'll drill for more oil or we'll, mine more gold. In the case of Bitcoin, it really doesn't matter what the price does to the supply schedule. The supply schedule is fixed.
Yeah, speaking of, of Bitcoin, I think, parallel to Bitcoin, you have technologies because you're talking about the underlying fundamental problem. Um, Andrew Jackson was the only president to pay off the national debt for the problems that you just outlined because he got rid of, the second central bank of the United States. But before I go into central banks, um, you have this another coin, stable coin, right? By Circle. Um, how is stable coin? Speaking of Bitcoin, so you have these other tokens that they all run on the blockchain. But how is stable coin in fact stable if it's attached to fiat currency?
Well, it's not. I mean, it's stable in the sense that it doesn't fluctuate with the price of Bitcoin. But what the stable coins really are is just a way of using the um, digital rails to make payments between one another. And in Bitcoin, you can do that. With stable coins, you're just doing it, but you're using the dollar as the numeraire, as the base level. And I think what's really driven the demand for stable coins, it was interesting. Excuse me, I was recently at a conference. I met a bunch of people who were from Russia. And when the U.S. Grabbed all the Russian assets and the war broke out in 2022, and then they shut down the SWIFT system for the Russians, Russian businesses didn't really have a means of paying one another very easily unless they were both at the same Russian bank. And so stablecoins, in my opinion, grew largely because people were looking for ways to pay outside of using the dollar rails of the SWIFT system. And, people could say, well, pay me in Bitcoin. But as we all know, the Bitcoin price is pretty volatile and the dollar price is less volatile. Of course, I express that the other way. The dollar price of Bitcoin is very valuable. Bitcoin is a Bitcoin. But the point is that stablecoins have been adopted to kind of help people to understand that they're paying on a dollar basis, but use crypto rails to do it. And, it's a positive in one sense, and that is it creates, one, it creates awareness of generally, digital money. And two, for the United States government, the stablecoin issuers are big buyers of the treasury bills, and the government has a lot of treasury bills to sell. I think as much as anything else, that might be one of the reasons why the Trump administration is being so pro stablecoin, innovation in this area. And as you know, the Stablecoin Act just passed. So, I think a big part of that is that the knowledge that those guys are going to be buyers of treasuries, and the government's got a lot of treasuries to sell.
So I'm going to take a step back here. In the book, you discuss the Federal Reserve's role in exacerbating economic dysfunction. What reforms do you think are necessary to address the issues with central banking in the U.S. on the points that you just made?
Yeah, great question. So the book talks about this in chapter 22. I actually have policy solutions that I propose. I mean, honestly, we really don't need a Federal Reserve. If we were on a Bitcoin standard, you couldn't print money, and the Fed should not exist, in my opinion. I mean, the Fed is a cartel. It's a money, management, money printing cartel, and they fix the price of money through the interest rate. And in so doing, they basically break, kind of market principles. I mean, the interest rate, first of all, is defined. It's the price of money. It's the value, of getting something today that you don't have, and you pay interest on the money you borrowed. And what the interest rate should reflect is a balance between the people who have savings and want to return, and the people who want to borrow money for projects or for living and are willing to pay interest to do so. And so it's a market-based rate. It should be a market-based rate. Now it's not, because of the Fed and the Keynesian model, which says that, you've got to manipulate the interest rates to keep the economy growing and at full employment. And there's nothing that could be further from the truth. I mean, that's a complete lie, and that's a complete fabrication that they've used to maintain their power over the monetary system, which benefits politicians, central bankers, and people who can borrow cheaply. And that's the reason why the rest of us pay so much for groceries. The fact that this system is broken. So, I can't remember who said it, but it's, if the Federal Reserve is a cancer, I think it was Ron Paul, if the Federal Reserve is a cancer and you cut this cancer out, what do you replace it with? The answer is nothing. You don't, you don't really need a Fed. I mean, and if you had a fixed money supply like Bitcoin, and you had market-based interest rates driven by Bitcoin borrowing and lending, you wouldn't need a Federal Reserve. And so that's actually where I propose that we go. Now, that's a very radical step, and we're not just going to get there overnight. In fact, I don't think we get there until we experience a fair amount of additional pain in terms of inflation. But I think eventually what will happen is inflation will become persistent enough and high enough that the calls for an end to the Fed and a return to sound money will actually start to be listened to. And politicians who are willing to talk about sound money will be voted in, and those who aren't in favor of it will be voted out. And so I do believe we will ultimately return to a sound money system. Now, that may take a little time. That's not happening tomorrow. But I think that the fact that the money is as badly broken as it is becoming common knowledge. I mean, you're seeing even guys like Jerome Powell, who's the chairman of the Fed, saying our fiscal situation at the U.S. federal government is not sustainable. Okay, Jerome, what are you going to do about it? You're the enabler.
100%. Yeah.
You're the enabler. But the point is, it's kind of like a problem we can all see. It's like having a relative or a friend who's a drunk and they're drinking too much, and they got to go cold turkey, but nobody ever wants to do it. And that's kind of what's going on with the government. But I think if we have extremely high inflation, or maybe even bordering on something that approaches currency failure, well, then they're going to have to do it, because people are going to, just say, I don't want to hold these dollars anymore. I mean, this is, in other hyperinflations, this is what happens right before the currency becomes worthless. Everyone just rushes to spend it before it loses its purchasing power. I mean, and there are many, many, many examples of this. So,
Yeah, I want to dig in deeper there, because I think that's a perfect, segue into um, the next question, which, the 2 points that you just illustrated there. How does blockchain technology really help, or can it address this problem? You mentioned the Stablecoin Act, which was the Genius Act. Obviously, the Trump administration is very, pro crypto, um, pro blockchain technology. But, Ray Dalio, the reason why he was initially skeptical about Bitcoin, because he said government's never going to give up control of the money supply. And while the Fed, yes, is a private entity, obviously, there's this interrelationship between, the government and the Federal Reserve, going back to when Abby Aldrich married John D. Rockefeller Jr., right? So since then, there's been this symbiotic relationship between the two. So is blockchain really going to be a solution, or is it going to be a tool that's leveraged by the government for greater control of the monetary system?
well, that's a great question. And there's some who argue that they're going to try and do a CBDC, and certainly the blue team would do a CBDC if they could. I try to avoid the term blockchain. I mean, Bitcoin is built on a blockchain, but Bitcoin really is kind of a unique animal. And I tend to dismiss most of the other cryptos as playing any kind of an important role in the monetary future. I mean, maybe one of them will have some some utility as a payment mechanism. But I think in terms of the store of value race, Bitcoin is one, and there's no going back. I mean, the network effect is just too large. So, um, to answer your question in a broader sense, I mean, I think what will ultimately happen is that the Bitcoin blockchain will become adopted as the base layer of money in society. I mean, I think that's where we're going now, but like I say, it's not a straight line. Um, and so that's where it gets a little tricky, and it's pretty easy to see if you look carefully enough, but to those who are outside the system and haven't studied Bitcoin, they don't see it so easily.
I think I know some of these, but you said Bitcoin's a bit of a unique animal. What distinguishes it from the other assets and currencies that have their own blockchain?
Of proof of work mainly. I mean, the fact that it takes energy to validate the chain and produce more Bitcoin. I mean, proof of stake, most of the other coins, not all of them, but most of the other ones have been built on proof of stake. And, I mean, for money to have value, it needs to absorb value to be produced. And so in the case of gold mining, it's spending money to dig up rocks and process them, and that costs money. But at the end of the day, you get gold that's hopefully worth more than what you spent to pull it out. The same is true with Bitcoin, the Bitcoin mining. Every 10 minutes, roughly, another block is formed, and it's necessary for a lot of computing power, to compete for and form that block. And that's what keeps the network secure, and that's what keeps the network from being, hacked, is all of that enormous computing power. And we're so far down the line now. I think there was a time in the earlier days, very early days, where this was just an experiment. And if somebody had 51% attacked it, or somebody had built a competing network, they might have had a chance of succeeding at either of those things. But I think today, there's been literally billions of dollars invested in the mining of these coins and the securing of the chain. And so to try to disrupt that, or, undo that, it's impossible. So it's, to me, it's a fait accompli that Bitcoin is going to continue to grow. The unknown is at what rate, right?
How would Bitcoin, though, fit into this global economic paradigm where, many countries reject it as a means of payment? Um, the Federal Reserve has an entrenched relationship with the corporatocracy, the plutocracy, if you will. So, you know, yeah, how, that's my big question. Like, I see the utility of Bitcoin, but I struggle to see its ubiquitous adoption with those entrenched powers having the control that they do.
Yeah, no, absolutely. I mean, they're trying to push XRP. Europe, the ECB has been talking about doing a CBDC, China as well. I mean, I don't think there's any doubt, Joseph, that the powers that be in the existing legacy system don't like Bitcoin, would like to see Bitcoin fail, and believe that all the problems that Bitcoin solves, they can solve with the system that they would propose and control. Um, but that's nice. And if you believe the government's going to win this one, well, then that's one point of view. I mean, there was a time 5 years ago when a lot more people believed the government was going to win this one. And yet now we've got, ETF approval, a strategic Bitcoin reserve, and, at least some piece of the government that's very supportive of Bitcoin. And so, and my view is it almost doesn't really matter what the government does. It does, but it almost doesn't matter what they do, because the adoption is just growing continually. Now they can throw sand in the gears. They could tax it. They could try and grab it, like Roosevelt did with gold. They could do other things to slow it down. But, people in a country where they did that might move to a different country. I mean, everyone gets to kind of vote with their feet. And so my view is that and meanwhile, they continue to just, do crazy, crazy stuff in terms of spending and the way they're managing their P&L and balance sheet. I mean, we just saw the big, beautiful bill, and, it went from the House and it was pork laden, and it came out of the Senate, it was even more pork laden. I mean, there is no stopping the deficit growth and the debt growth that the U.S. has been involved in really since COVID. And the only thing that actually, I've said this in another podcast, the only thing that would cause me to question my Bitcoin thesis would be, incredible responsibility on the part of the United States government. And, we can all debate, whether that's realistic or not. But my view is it's what they've shown us is that that's extremely unlikely, unless forced with a real crisis, which, maybe it could become more likely then. But
Yeah, I think you bring up a great point, and I want to drill in a little bit further there because we're big fans of Milton Friedman, particularly his views on liberalism and how economic freedom is a prerequisite for political freedom. But he was also a monetarist, right? And so you have these two, if they are competing factions in government. But you mentioned the big beautiful bill, and I guess what we struggle with here at Alio is there's a lot of provisions there that are pro growth. I mean, we certainly wouldn't want to see the tax increases go through, but you have one side that tends to be viewed as more socially liberal, but puts more constraints on the economy. The other side seems to be better for the economy, and whether it's true or not, it's perceived as socially being more conservative. Um, is this an Hegelian dialectic, or is this actually, are there, how does this, factor into this whole paradigm here? As far as, the direction on the global stage, like how do you perceive that battle between, as you say, the red team and the blue team?
yeah, I mean, there are differences, between red team and blue team, but I mean, in a lot of ways, I like the label the uniparty because nothing really does seem to change in Washington. At the end of the day, they vote to spend more and increase deficits. And I think, I mean, a good instructive view on this is just look at the splash that Trump made when he was elected, and the notion that they appointed this DOGE, the Department of Government Efficiency, and Elon and Vivek were going to run in there and figure out where all the, inefficiencies were. And they did to some degree. And I applaud all of that effort. Okay. I mean, it's great. And they, the USAID stuff was appalling, and they clearly uncovered some waste. Okay. But Elon started off saying they'd save 2 trillion, which is totally unrealistic. Then he said they'd save 1 trillion, which is also unrealistic. I mean, without major reform in a lot of areas. And now, I don't know, you can debate it, but it looks like they might save 100 or 200 billion, which is, not trivial. It's good. It's in the right direction. But this is in the context of a deficit that's 2 trillion, or 100 to 200 billion, in the context of a $2 trillion deficit. So you're talking about, between 5 and 10%, in terms of cuts, which, like I said, I applaud, but it's very hard to stop, the machine as it's currently, constructed, because the people in the Congress, they take money from the people who want that government money, and they want to be reelected, and so at the end of the day, they bend to their wishes. I mean, I thought that at a minimum, I thought maybe Trump would cut the defense budget, but the defense budget is growing too. So it's really rather sad. And so, what it brings forth is, so, okay, so now what? And now what brings us to a chapter that I had in the book called Stein's Law, which says that, if something cannot go on forever, it will end. And I applied it to the notion that you can't grow your debt faster than your GDP without there eventually being a crisis. And we know this. We've seen this in the past. We saw it in '08. We saw it, a little bit in 2020. And we're going to see it again. And, unless we stop growing our debt, and there's no indication they intend to do that. So my view is, there's another one coming, and at the end of the day, when that comes, they will print the money to keep the thing going, because when faced with the, let's let it all collapse and liquidate everything like they did in 1929, or, let's print the money to keep the thing going, they're going to print the money to keep the thing going, even though it's inflationary. It feels less painful than the alternative. I mean, in '08, and the banks were all basically functionally bankrupt, and Wall Street would have closed down. And as Hank Paulson said, the ATMs would have stopped working. I'm not sure if that's true, but it sounded good. He went to Nancy Pelosi and he literally begged her and said, "You've got to give us this TARP, or else the financial system's going to implode." And the first time through Congress, everyone voted it down because the feedback from the populace was, "Hey, this is ridiculous. We shouldn't bail out the banks." Then the stock market fell a record amount in one day. And they went back and said, "Guys, if you don't do this, the whole economy is going to collapse." And so they did it. And this is the system we've got, where the bankers, the financiers, the Federal Reserve, the Keynesians, all the people within the system who benefit from it, can kind of hold a gun to the head of the rest of the economy and say, give us our money or we're going to croak the thing. And everyone's afraid to call their bluff. And so we give them the money and then we get inflation.
Yeah, we're essentially where Hayek, what Hayek described is essentially playing out in real time, and that, most people are living in this world of serfdom. You mentioned the uniparty, and I think, we have the Constitution on our website, but I'm going to go a little bit, off to the side here because, on the note of the uniparty, I personally had this view that, Reagan came in with good intentions and they were able to get, the Rockefeller establishment into that administration, via Bush Sr. And pretty much since then, I mean, they were trying for years and years before, but, it's been heads we win, tails you lose, every election since. Is MAGA because and the reason why I'm asking this, so you have some context, because the Constitution, you heard John Kerry criticize the First Amendment publicly. George Soros is on record saying that the Constitution stands in the way of the global system that they envision. Is the Trump administration, an attempt? Because I mean, Elon Musk was even offering people $1 million to read, to read the Constitution, and so is there a real challenge to preserve our fundamental freedoms and the moral ethics that this country was founded upon on this idea of liberty? I mean, is there an effort to do this, or is it just theatrical?
Yeah. Well, there are two pieces of that. I mean, first of all, I think the Constitution is a beautiful document. And I think that, sadly, like all things constructed by people and interpreted by people over time, it's been misinterpreted. And, now there are things occurring that there's no way the founding fathers would have said, oh yeah, that's okay. But so be it. I mean, things evolve over time, and in the defense of those who've had them evolve is, well, times have changed. We have to be more modern. We have to do it this different way. And I would argue that in some areas they may be right, in others they're wrong. With respect to MAGA, they said they wanted to bring back the Constitution. They said they wanted to follow it strictly. They were kind of the pro-America party. And in general, I mean, I'm supportive of a lot of the initiatives that they've put forth. But to be fair, I think they're myself and other people who are in the MAGA camp are now looking at it and going, Jesus, it's just the same old, same old. Do you know what I mean? I mean, we started an undeclared war against Iran. I mean, Congress is supposed to approve of a war. The Epstein files just kind of disappeared. There are a number of things that were kind of promised to the MAGA base that haven't necessarily, come true. And I don't know why. I can imagine why. I mean, there's money, politics, other countries, et cetera, that are all influencing our government. Our government, clearly is not always doing the best thing for the great mass of our citizenry. They're doing things that are in their own benefit or the benefit of other countries. And so, it's disappointing. I mean, everyone says they're going to drain the swamp and take us back to the constitutional republic that we started out as. But the machine is just really, really deeply entrenched, and it's very, very hard to do that. So, while I applaud the efforts, I think there are others in the MAGA camp who, like me, would say they're kind of coming up short here on some of the stuff.
Yeah, I think, and that kind of, leads us to the last segment of the podcast, and that's macro investing. At the end of the day, we can't control these things, and disruption happens constantly. How do people take it? Because great change also brings opportunity. As much as we might not be in favor of certain things, how can people best position themselves via macro investing to take advantage of the changes that you outlined?
So the book talks about this, and the really easy central theme of the book, and I think that it's anyone can absorb, is that we're in a sovereign debt crisis. The government is really out of control, and it's always been somewhat out of control, but it's getting worse and worse. And so that means that it's accelerating in terms of the problem. And what it means is the solution, the historical government solution to the kind of problems that we're under right now is to print money. And so as an investor, probably the most important thing you can do is make sure you own things that the government can't print. The government can't print gold. The government can't print silver. The government can't print Bitcoin. The government can't print Apple shares. Government can't print houses. Bondholders are certain to be the big loser in the next decade, in my view. Anyone holding a fixed income security, they'll get paid back the money. It just won't buy as much. And inflation, in my view, is very much not likely to look like the past 40 deflationary years from 1980 some odd down into 2020 when we hit peak deflation and the COVID when the world shut down. So I think we now live in an inflationary environment, and history shows from the 70s that inflationary environments are difficult to contain. It's, once inflation breaks out, they push up the price of things, and then workers have to pay more, and so they demand higher wages, and it's a vicious cycle. The last one was stopped by Paul Volcker taking interest rates to 20%, and which almost bankrupted my father in 1979 and 80. But you couldn't do that today because the debt to GDP today is 120 some odd percent. Back then it was 35. So if we did that, the whole country would go bankrupt. So it's a very, very messy situation. And I think the more likely outcome is that we just keep trending towards this higher and higher and higher inflation until such time as it's really becoming just a very huge problem. And everyone finally says, I don't care what it takes. We've got to fix this. And that might involve a one-time reset. And I talked about that in the book too. So, my view is we're in a fourth turning, which is kind of one of these every 80 years, the rules of society get rewritten. And in particular, I think the rules of society that are going to be written in this particular turning are the monetary rules, because the money system is broken. It started, it started getting broken a long time ago, Civil War in 1913, but it really started getting broken in 71. And it's only gotten worse since then. And so, it's an issue that will, in my view, force reform in a lot of other areas when we do it, which is a very good thing. The optimistic side of my views is that once we come through this challenge and we return to sound money, I think the world will be a very healthy place.
Yeah, I think, for retail investors, as they think about how they want to construct their portfolios and position themselves for this. Just to give you an idea, I personally am not an owner of bonds, right? As a company, we generally favor this combination, these elastic portfolios, combination of risk on, risk off assets, a lot of the things you're like oil, gold, real estate, Bitcoin. But with technologies that are going to be part of the solution to the problems that you outline, right? A lot of the AI technologies. And so, are you generally in favor of that view? And are there specific technologies that you like, yeah.
I think AI is going to change the world. I think it's very important. It reminds me a lot of the dot-com thing. I don't think we have any idea how important AI is going to be in the next 10 or 15 years. I do think some of the AI stocks are ahead of themselves. I'm not sure I'd be out there buying Palantir at these kind of multiples. You know, yeah, all the things you mentioned are good possibilities. In the book, what I said, and I'm not supposed to give investment advice because look, everyone's situation is different. This isn't investment advice. Make your own decision. But in the book, I said, look, we've shifted from what I think has been a deflationary world for 40 years into what's now, for a time period until we solve this money problem, an inflationary world. And therefore, and a lot of people, their biggest investment is their house, which kind of protects you in inflation. The second biggest investment are their stocks, which kind of protect you. But some older people tend to have a lot of bonds. Those aren't going to protect you at all. And I said, if you don't have 20% or more of your assets in things which are kind of inflation resistant or perform well in inflation, and oil, gold, silver, and Bitcoin would be kind of the top of that list, then I think in 10 years, you're going to kind of regret it. And so, you need to have some allocation to this stuff. And it's really kind of classic, the under allocation. To take gold as an example, the old form of sound money. You go to your average investment advisor and talk about gold and they'll roll their eyes. Nobody owns gold. Yeah. Gold is like a half of 1% of all the portfolios in the country. And it's proven to be a portfolio diversifier. When stocks do poorly, gold does well. Stocks are very overvalued right now. So, yeah, I just think that I think the people who want to get ahead of the curve today in the, mid 2025 timeframe need to be asking themselves, do I have enough inflation protection? Do I have enough real estate? Do I have enough gold? Do I have enough silver? Do I have enough Bitcoin? Stocks will probably protect you to some degree, but stocks are not cheap right now. And, stocks can perform very well if we have what's called a crack up boom. I think you guys probably know what that means. And that's where the money supply just continues to grow relentlessly. And so the price of everything just keeps going up relentlessly, including the stocks. And if you look at countries that have experienced hyperinflation like Weimar and Venezuela, their stock markets did very well in nominal terms, but the money was losing value. It wasn't the stocks that were becoming more value, it was the money that was losing value. And when those stocks got sold, the amount of cash they received for them bought less in the way of goods and services. So, the best pure play on inflation is Bitcoin. The second best is gold. And the third best is silver.
Yeah, no, I love it. I mean, Ray Dalio, he's been talking about gold for a long time, but I was generally of the view that a lot of the all weather portfolios held way too many bonds in there. I mean, some of the international bonds, maybe, but I always like negatively correlated assets, in any portfolio. And again, these are just my personal choices and decisions.
So I guess I did want to sort of tease apart for our listeners the distinction between these proof of work and these proof of stake algorithms in crypto assets. Proof of work being the system where you put in energy to solve a mathematical problem and are rewarded with Bitcoin or the relevant crypto asset, and that's sort of the process by which the blockchain is validated. Proof of stake, the validators, the computers that are running through the blockchain, ensuring that everyone agrees on the entire ledger and where all the transactions have gone. Um, those validators are rewarded based on how much of the cryptocurrency they own. And Lawrence, maybe you could sort of walk through the basic problem with proof of stake systems.
Well, the problem with proof of stake is the people who own the most can control the ledger to a degree. And then, even more importantly, in the case of, I use Ethereum as kind of the test case because there are people at the top of Ethereum who own the most of it. And there's Vitalik or Vitalik, I'm not sure how you pronounce it, but I'm a guy who's kind of the CEO of Ledger, so to speak. And, the Ledger's, I'm sorry, ETH, I'm talking about Ethereum. ETH. ETH has changed its monetary policy, at least half a dozen times. And so, you're burning ETH in order to, and earning ETH if you stake. And there's just, it's a confusing algorithm that you don't really know what it's worth. And if you look at, ETH in Bitcoin terms in the last 5 years, it's lost an enormous amount of value. Now, the argument by the ETH people would be, well, yes, but we can do smart contracts and we can do some neat stuff, and therefore ETH has value. And maybe that's true. I'm not disputing that. I'm just saying that in terms of, if I look at any form of money, the most important quality of money to me anyway, um, is that it will hold its value through space and time. And so that if I work for a year and I earn an amount of money that in 10 years, that amount that I earned would be equal to have purchasing power equal to what I put in way back when, or maybe even more if it's growing in value. And, that's just not true of any of the other cryptos when they're compared to Bitcoin. Because Bitcoin is based on proof of work, because the stock to flow is so low, so high, it's high stock to low flow. It's just going to hold its value. And so that's to me, all money starts with that. Now payments, that's a different matter. Gosh, we got a million payment systems. Venmo, PayPal, smart contract. Stable coins, credit cards. There are tons of payment rails. But if I take some money in and I spend it immediately, I don't care about monetary debasement because I don't even hold it long enough for it to debase. But once you start, really money is all about, in my view, and about making the world a better place. Money is about capital accumulation. So it's capital, it's savings that then allow investment, and it's investment that then leads to greater productivity, and it's greater productivity, getting more for less, that leads to improved economic well-being. And so if you look at why we all live the way we live today and enjoy the things we enjoy, it's because over time, we've learned how to do things more efficiently. A good example is what we're doing right now. Here we are in different parts of the country, on different computers, in real time, taping and having a conversation that's pretty high quality that, even 10 or 15 years ago, you had to go to a conference room and have a special video conferencing hookup to do something like this. And it wasn't even as good. It was spotty. So, these are the kinds of productivity enhancements that, capital investment bring. And so having capital that will hold its value is very important.
No, thank you. I think that really clears up clarifies the soundness of Bitcoin versus the proof of stake cryptos, which often do change policy, every 2 years, or depending on who's in control and who makes decisions.
Well, and that's, yeah, I should mention, I didn't really use the word, but the fact that Bitcoin is distributed and that there are competing miners and competing nodes and, tens of thousands of copies of the code out there, and we all see it in real time. That's a real check and balance on anybody kind of taking control of it and bending the rules. I mean, I think one of the most unique and powerful attributes of Bitcoin is that nobody can control it. I mean, it's by definition, because it's a mathematical algorithm, it's by definition fair. Nobody has an advantage over anybody else. Everybody looks at it. It's the exact same thing to everybody. And that's very, very important, because in today's monetary system, the banks and the central banks, they control it. And that gives them, and then certain people who support them, an enormous economic advantage that they've exploited ruthlessly, you know, at our expense, because our groceries cost more. So,
Yeah, on that point, that brought up another question that I'd love to ask you about, because in the startup world, I always talk about the alignment of incentives and how important that is to get results. And when you have um, globalization, right? Like globalization, it's like the banks already have all this control. The Federal Reserve goes back to 1913. Is it just the fact that this thing keeps feeding itself, that it just green knows no end to power and control? Because it's like, did you really have to? It just made capital that much more concentrated, in my view. Yeah, how do you, factor that into your general views about, central banks and the monetary system?
well, yeah, I mean, globalization is a good thing in general. I think if it's distributed, but insofar as it leads to control. I mean, you've got these big central banks. You got the ECB, you got the Fed, you got the BOE, you got the Bank of Japan. I mean, they're all just different varieties of the same problem, and it's not globalization that's a problem. Globalization in general is a good thing. I mean, distributed information, distributed. I mean, look at what the internet's done in terms of breaking down the barriers. I mean, we used to have very centrally controlled media where, CNN and MSNBC told us what to think, or the New York Times told us what to believe. And what those people have managed to do is they abuse that trust, and now nobody trusts them. And we developed all these alternative sources of information, and people go there for the truth. And that's part of the benefit that we're seeing right now of all this technology. I mean, as my book talks about, technology is what saved us, and it's going to continue to save us.
100%, and that's why we're so pro innovation. What I mean is globalization a check and balance on the monetary system, or when you talk about the IMF and ISIS, the Bank of International Settlements, is it actually, are they still at the top of that system?
They're still at the top. I mean, it's yeah. I don't think globalization necessarily impacts it one way or the other. I mean, we've got all these central banks talk to each other. The IMF controls a certain amount of the financial system, and the BIS, is the central bank. So, there's a whole system built up and around keeping that system alive, and they've done it for 40 odd years. But it appears to me it's coming to an end. There's just too many leaks in their dam, and so as those leaks grow larger, as inflation goes more persistent, as everyone comes to realize that they can never stop printing money, well, we're going to abandon their money. We're just not going to use it anymore. People are going to, I mean, you might get paid a dollar, but you're going to instantly switch it into Bitcoin because you realize it's going down in value compared to Bitcoin. Right now, some of us would do that and realize that, but we're a small minority. But there come a time when everybody's going to realize that. And ultimately, there'll be a time where I was, I won't accept dollars. I don't even want a dollar. I don't want to have to go through the hassle of changing it into Bitcoin. And at that point in time, the dollar becomes worthless. It's a historical relic, and that will happen, in my opinion. Now, that might be 10, 20, maybe even 30 years out, but it's going to happen because Bitcoin is just a better form of money for storing value. And store of value is the use case that always wins in the monetary game. That's why gold emerged as the best form of money, because it was the best store of value. There were other things competed with it, but gold had the best set of properties to be a store of value currency.
I guess what I'm alluding to is that there seems to be competing interests. You have the US, you have China, and then you have these banking cartels. Like the BRICS system, led by China, is a challenge to the US's hegemony, right? But then you have this central bank system that's really at the top of all of it. And I guess that's, seeing how that paradigm is going to play out and what the solution is going to be. It's going to be interesting to watch. And that's why we generally favor just, hey, if you can't control it, you might as well prepare and position yourself to benefit from it. And that's generally our view as a company. And so that's why we promote macro investing.
Yeah, that's a good view. And I think the best, the no-brainer way to benefit from it is just to own things they can't print, because they are going to print a lot. Mathematically, they almost have to.
100%. Well, Lawrence, this has been great having you in the show. I mean, this really, lies with our fundamental ethos. Yeah, thanks for joining us of another episode of Orwellian Optics, a podcast by Alio Capital, and we'll see you next time. Peace, love.
Thanks, guys.
Thanks again for joining us, ladies and gentlemen. Be free, think macro, invest smarter by joining the macro revolution with the only investment app powered by Altitude AI. You can join the beta at aliocapital.com. Again, that's aliocapital.com. If you enjoyed the show, please leave a 5-star rating, click like below, and subscribe so you don't miss out on any future episodes. Stay free, and as always, God bless America. This episode has been brought to you by Alio Capital. Get empowered to confidently grow your wealth while strategically managing geopolitical, monetary, and fiscal policy risks. Here at Alio, we combine professional macro investment strategies, personalized portfolio solutions, institutional grade data, and comprehensive wealth tracking into the only AI-powered financial investment app to help you achieve your financial goals independently. Be free, think macro, invest smarter. For more information, download the app now or visit us at aliocapital.com.